and welcome to this brand new series of Masterclass webinars, where the aim is to highlight exactly why some of our most important lender partners should be considered by broker and introducer relationships. We're going to spend the next 40 minutes talking and outlining where some of the most valuable niches exist with some of our favourite lenders and how brokers can crucially convert more enquiries and also save time by just understanding processes better. I'm delighted to be joined by Quinn, Head of Sales for Buy to Let and Bridging at WestOne. Morning, Jez. How are you doing?
Jason, I'm great. Thank you. Thanks for having me. Appreciate it.
No problem. And probably a starting point, Jez, is just before we delve into the questions, and I know we've got a varied range that I've put together, and we've got some from our broker audience in advance. But probably a good starting point is, do you want to just give people who maybe been living in a cave and don't know who WestOne are just a little bit of an overview about the journey you've been on as a business?
Yeah, of course. To be honest, I hear it quite often that like people have heard of us but don't know a lot about us. But effectively, WestOne, we started as a bridging lender back in almost 20 years ago now. Very London-centric bridging lender. That's where the name WestOne, right? It's the Mayfair postcode down in that neck of the woods. Since then, the business has evolved tremendously. We're now one of the UK's biggest non-bank lenders. We do everything but commercial terms. So we're really well known in the second space. So second charge. We're really well known in bridging. In fact, we're one of the biggest bridging lenders in the country, but we also do development finance. We've got a really well-established buy-to-let division. And then the latest string to our bow, which is about 18 months in, is residential first charge. So all facets of lending are covered. I'm responsible for bridging and buy-to-let, which is what I'll major on today. But yeah, we work with you guys, as you know, across all the different facets. So a great relationship there with the guys at Crystal.
One of the things I hear all the time, and brokers hear all the time, is how flexible lenders are with their criteria. But I think as we've found out in the past, some of them are pretending rather than genuinely lending. So that flexibility piece is sometimes found wanting. But what would you say with WestOne helps you stand out?
Well, it's one of them. I mean, I'm in buy-to-let. There's never a day that goes by when I'm not on the phone to our MD talking about some sort of exception or something that we need a view taking on. I mean, we're massively flexible anyway, so we've got a great breadth of things that we do, from kind of the vanilla end of the market, where it just might be coming to the likes of WestOne because we'll lend more than any other lender will, because we've got some nice leverage tools that enable us to do that, which has been a challenge in the market, to all of the normal stuff that a specialist lender would do, like your HMOs, multi-units and all that sort of stuff. But we've got really intricate bits of not niche criteria within those. So things like we have like shared utilities on a multi-unit for L block, don't bother us. Flats, like units that are under 25 square meters as part of a multi-unit for L block, don't bother us. Lots and lots of little things like that, right through to the more real niche areas of the market, like foreign nationals, expats, large portfolio landlords, first-time buyer, first-time landlords. But within that, I would say that I'd say probably about a quarter of the business that I do is an exception. So I mean, just in the past week, I've had views taken on adverse credit. I've had views taken on maximum age of a borrower. So we go up to age 80 as standard. We've just done a deal for an 82-year-old. Our product guide would tell you that the maximum HMO or multi-unit for L block that we would consider is 10. However, yesterday just had the green light on a 21 unit multi-unit for L block. And it's a coincidence because I normally use an example, because my telephone BDM Ali, who the guys at Crystal know really well, I use an example because about three months ago he got a 21 unit multi-unit for L block agreed, and that's the one I draw on, because we do like 12, 13, 14, 15 all the time. 21 was kind of the highest end, but had another 21 unit agreed yesterday. And on the bridging side, Jason, I mean, the bridging is so bespoke that it's all flexible. So it's like everything we do is kind of, we're taking a view on it, and we're renowned for extremely complex deals. I mean, I had a deal complete a couple of days ago that was like an offshore structure purchase that's been fair old hard work getting it through from the borrower solicitor side. But again, there's not a huge amount of lenders that are in that space that are looking at lending to like offshore structures and things like that. So we can be hugely flexible across both products, really.
I think when you talk about just how broad that criteria can be, it's maybe one of the, I suppose, one of the benefits of actually brokers or introducers actually using a packager like Crystal, isn't it? So being able to to cut through some of the overcome some of the barriers that might appear to be there is something. But that role of a packager, I know distribution wise, you've got a number of relationships, but a packager like Crystal has really got an important role as within that WestOne distribution model, hasn't it?
Of course it has, and I mean the guys at Crystal know WestOne, they know me, they know our criteria policy. They'll know where we will get to on exceptions. So it makes it's always packaged well, it's always presented well, it's always presented in the right way. Deals are always structured the way that they should be in order to get the most positive outcome. But exactly, I mean the stuff that whilst we do plenty of kind of run of the mill kind of vanilla deals, we also do hugely complicated or deals where you really do need a experience, and that's going to really help, and specialisms in that sort of area. And the guys at Crystal, there's no better that you could be working with. So I think the relationship is extremely important on both products, because you can't buy experience, and when it comes to this specialist sort of lending, experience is key in my view.
The buy-to-let side, Jez, obviously the landlords have been taking a bit of a kicking, haven't they? And I know we had the budget just a few weeks ago where we've seen base rate come down, but not necessarily always being reflected in the pricing with the fixed rates that are available. So that ICRs and being able to we also need to disturb landlords to actually get them to take action at the moment. How are you finding that buy-to-let market?
Well, so I'm coming off probably the best month I've ever had on buy to let in October, and the budget was obviously the 30th, so it's been a bit quieter. It's been noticeably quieter. I think my big concern when I listened to the budget was that the purchase pipeline might absolutely drop off a cliff with the stamp duty changes being immediate, and we haven't seen that. That hasn't had the impact that I expected it to do. So that's fortunate, because I didn't want the pipeline getting decimated after we've just had such a great month. But yeah, it's been a bit slower. I mean, swaps, it's not just the budget. I mean, we've obviously had the US election, which was followed really closely by, and then we've had the Bank of England base rate decision that were all upcoming post-budget, that have swaps got scared a bit. Swaps jumped up, lenders repriced. I think some sat back and thought they'll watch it. We're fairly quick to react both ways as a lender. So when swaps move up, we price, we pull, and we reprice. When they come down, we're really quick to reprice as well. So we have today, in fact, come out with some new adjusted lower rates. So it's really hot off the press. So we're hoping that things will settle, and we've got what, 4 or 5 weeks of business as usual now before Christmas, in order to try and make sure pipeline going into next year is going to be as strong as possible. But yeah, look, landlords have had a kick in. It seems like it's just been one thing after another. You go back to Brexit and COVID and Liz Truss budget and all this. It's just EPCs and everything. I mean, that didn't materialise yet, but all these things that have made it less attractive to get into property if you're a homeowner and you're looking to buy to let. but I think it still works. It's still there. The professional landlord is going to still do it. I think we'll probably see just a bit of a decrease on the, we've got a bit of surplus cash. What should we do? Let's buy a buy to let, and we want to have the one or two that are going to generate us income. I think you'll see a bit less of that. But for the professional landlord, buying right, diversifying the portfolio where there's opportunity to, using different product capabilities like bridging to pick up bargains and to do refurbs and HMOs, multi units, Airbnbs, all that sort of stuff. I think it's there. I think we're going to have a really, really strong 2025, and we've had a pretty good 2024 considering. It's a long answer, but yeah, the point is, look, I'm really positive. I always am. It's been a bit quieter the last couple of weeks, but I think it's just expected with where swaps have been and where pricing's had to go as a result. But I think things will ease off. I'm quite confident about, and as we move into next year, I think it'll be back to being really busy.
What kind of tips then would you give the brokers around that landlord database that they've maybe got? So you mentioned diversification there, and I said about almost needing to disturb landlords to actually take action. What kind of hints and tips would you urge brokers to consider?
You've got to communicate with them. I mean, we've seen what I mean. As long as I've kind of been in buy to let, which is a fair old few years these days, it's been all 5-year fixed. And what you don't want to be doing is speaking to somebody and then in 5 years coming back and trying to speak to them again and expecting to get that business. You need to talk to your clients. You need to make sure they're educated on. For me, the broker's job is to go and educate their clients on the latest changes, what the market's looking like, what other portfolio landlords are doing to increase returns. Effectively, they're running these portfolios as a business, so the broker fits into that. For me, communicate, make sure you're taking advantage of educational offerings that are in the market, things such as this, but other things that are more generalized around the market itself, so that you're almost at the forefront of it, and the fact that you can talk about it and you can guide in the right place. I mean, we've seen, particularly down south, like yields have been absolutely decimated, and given where after the mini budget of, I mean, it was a while ago now, but it feels like it wasn't too long ago. But given like the mini budget and where that moved rates to and accelerated the rate increases, people are coming rolling off 5-year fix and they've got no option but to sell, or they can't move, or they're losing money on the buy to let because the mortgage payment like is considerably more than what the rent is, and it's having a look and making sure you understand your clients, their portfolios, looking at opportunities, making sure it's safe, making sure that you're talking to them regularly so that they're not going to go elsewhere and they're not going to try and do things direct, but also look at things like HMO. Again, don't be scared of HMOs. They're a great option. I had a bit of a debate with some of the parents of the football team because they were talking about HMO, and I think there's a place not far from where I live that has been. It's an old pub, right? It's an absolute eyesore. It's just down the road from a petrol station. It's currently got like all the smashed windows on it because the pub's still there. It's got all the boards up around it, and there's planning gone in to turn it into like a multi-unit slash HMO kind of set up, some apartments and whatnot. And they're putting it on the group to sign the petition to ban it and stuff. And I'm like, guys, why? What's the issue? And having to have this argument. But like, yeah, I mean, again, yeah, HMO landlords that you're going to have as your clients will I'm sure will understand it. But there's I mean, I forget what my point is here, but the point is like there's this stigma around HMOs and things like that. But HMO is a really useful tool for again, it solves housing issues in areas where there's big populations. It's a great way to diversify your portfolio and maximise yields, as are things like multi-unit freehold blocks, as are things like Airbnb. I mean, Airbnb is a fantastic one. There's you're looking just in Birmingham and things like that. And it's like, well, who'd use an Airbnb in Birmingham? But they've just got the brand new hospital open. People going for treatments and things like that. People come and stay in Airbnb. It's hugely popular. I hear brokers talk about it day in, day out, like that they've got client that's just done this Airbnb and they're earning 3 or 4 times more than what they would have done if they'd have put it on normal rent. And it for me, it's time to embrace that sort of stuff and look at it and see what can I do here? I'm going to buy my next one. What do I want to buy? So a bit of a long answer, Jason. Apologies, but I'm rambling.
I get it. Look, landlords are naturally entrepreneurial, aren't they? And I think, seeing them move into that, that Airbnb and that diversification of asset class. So the guys who've had residential portfolios, having some semi-commercial, having some HMOs, as you mentioned, it's just been almost like a logical progression as they've looked for opportunity over the last 12 months. And we've certainly seen the same. And similar to what you're saying there, Jez, we've seen this professionalization of structure. So we're seeing maybe some landlords who've maybe had part of their portfolio in individual names and part of it in an SPV or limited company names. They're actually just recognizing that they need to get their affairs in order, whether it's to satisfy the tax here and now, or whether it's to satisfy inheritance tax, God forbid, if anything happens to them. We're just seeing this professionalization and this diversification, which is, look, as you touched on there, we're both optimistic blokes, and I just see more opportunity as we go into the next couple of years with what's taking place with those portfolios. And then what about on the bridging side? Because again, I know the bridging is something that you're equally as passionate about. What kind of trends have you been seeing with bridging, and again, maybe where can brokers sniff out opportunities in your opinion?
Yeah, I mean, again, I think we've probably got the most broad range in the market when it comes to bridging, because we literally do pretty much everything, and we can do any value in any entity. So we see a massive. It's not like we're a one-trick pony where you come to us for this specific type of bridging. We kind of see a bit of everything, but certainly from a broker's perspective, I mean, if I had £1 for every time I saw a broker and they say don't really see any bridging, and then I talk to them about it, and then they realise that actually they do, they just aren't recognising it. I'd probably have as much money as you have, but I reckon I mean, listen, every time you look at a normal run-of-the-mill broker that's dealing with residential buy-to-let inquiries, every single nil valuation is a bridging opportunity. Every client that has someone in the chain's fallen apart is a bridging opportunity. People that want to go and purchase their first property or an investment property, it's a potential bridging opportunity. There's big bargains to be had if you can go in as a cash buyer, and the exit stacks up, and you can go in and you can save yourself some dosh. The example I always use because I hear a lot that bridging is expensive, right? And of course it is if you compare it to term deals. But the best example I have is, and I'll try and anonymise it in case anyone's listening, but there's somebody that I know that had their house sold, lived in West Bromwich, lovely part of the Midlands, but we're moving out to a nice village out in the countryside, found the dream home, and had sold their house, 340,000. It was the value, and the chain broke. The issue with the chain, they lost the buyer, and they were panicking because they couldn't afford to buy the dream home if they didn't sell the house. And someone suggested they have a little conversation with me, because I might know how to help them. So I had a chat with the guy, and found out the numbers, found out what they were looking to do. A chain break bridge would have worked on the numbers easily, and if it had gone full at the time, because the rates were a little bit lower, back probably this was about 12 months ago, but we were talking, if it went full term, it would have cost 16 grand. That's in terms of interest, fees, and all that. And listen, it's 16 grand is a fugazi amount because it's all retained in the facility. So it's not like you're handing 16 grand over. It's a notional amount that's what this would cost if it went full term. The answer back to me was, Jez, it's too much money. It's too much money to accept to pay 16 grand on it. So, but they didn't want to lose the house. So what they did was they did a quick sale on the residential, accepted 290, and then went through with it. It's cost them 50 grand because they've accepted a lower asking price. Now, what the guy could have done in that scenario was do a chain break bridge, put it on. If it goes full term, you can hold out for your asking price of 340, which had already been achieved. It had just been lost to buyer because of something else that was unforeseen. You could even set it for 320. put it with 320, you're still going to end up being 10, 15 grand better off. So the notion that I hear that it's expensive, I just think people need to use it for what it is. It's a great way to fund transactions, to save money, or to make money. And we see tons. I mean, today we've sent out like numerous sets of terms, ranging from people that are. I've got a guy that needs to complete on the 22nd, which I think is next Friday. We're fortunate, one of the lenders that I would like to think are best in class when it comes to speed and execution. We're one of the few lenders that could get that deal done no problem by next Friday. I've got a deal in for January the 16th, which is going to be quite a complex commercial transaction. But we do everything. And as you see, I'm very passionate about it, and I'm very passionate about the place that bridging has in the market. And for me, brokers. Not every broker will have the permissions to do it, and that's where the guys like you will come in and be able to do it. But there's a real, if you take some time to educate you on identifying those bridging opportunities that come up, that you will see, and you can jump on them, and you can work with a specialist distributor like yourself that really understands the market and can really help close that deal for the client when they maybe haven't got the confidence to do it, or they maybe struggle to sell the cost of it, for example. Coming in and working with somebody like you guys who really get it and can explain the benefits, and actually probably for that guy would have closed the deal. He's going to be very valuable.
Examples, Jez. We have so many examples, Jez, where we'll get inquiries in that look like they're a resi or look like they're maybe a commercial term deal. When in reality, when you get under the bonnet and you start actually looking at what is needed as a solution, and quite often, bridging can feature, because as you're touching on there so passionately, it's so flexible when it comes to that initial underwriting. And as you were also intimating, we've seen numerous occasions as we've gone through this year where the actual customer profile of clients who lenders are actually now having as bridging clients are A+ profile clients. These are people who just need money quickly, or as you indicated, they're just people who maybe the wife has seen a particular property that she wants to, she set her heart on. Their house hasn't sold, so they'll do a bridge on their existing, which may be unencumbered, or particularly have a particularly low yield on it, and they'll basically position themselves as cash buyers so they can move quickly for the property that they want to move into. So I think the originations that we're seeing now with customer profile into bridging is we're seeing so many more that are A+ profile, and it's a solution sale, right? I bet we've both got clients, we've both got friends, or we both know people who have built up quite a nice portfolio and have become pretty wealthy, and they've used bridging at certain times, and they haven't used bridging because they thought it's expensive. They've done it because it just provided a solution, right?
100%, 100%. Well, I mean, one that's like that sticks out was yesterday. Discussed a deal yesterday. So I've got a lady, an older lady that lives in a retirement community. She's unfortunately no longer mobile, and it's a very exclusive retirement community. But one of a property has come up in that community that is a bungalow that is nearer to all of the amenities that the community provides. So she hasn't got the cash, but she doesn't have any finance. It's a bit cheaper because she lives in a house currently. This is a bungalow. So raise against this one. She can buy that one, which will be snapped up like that, but she can go in and buy that one as a cash buyer, fund 100% of the purchase price, and the exit of the bridge will come when she sells that other one. It puts her in an absolutely great position. She can go and buy the ideal property for her, given the life circumstance change that she's just had. Ideal for her, and she can do it and go in there as a cash buyer, snap it up really quickly. And as I said to the guy yesterday, I'll get that completed this month for you, no problem. So she can go in there and she can be in there by Christmas, and not have to have all of the strain of trying to travel down to no doubt where all of the festivities are going to be and things when she's no longer mobile and stuff. She can be in the new house, which is fantastic for her, and that's a fantastic option. So yeah, I mean that's a great example, I think, for someone that would be a non-traditional. I mean, this lady, I'm sure, is in her early 80s. That she's going to use a bridge to get what she needs, and it's a great solution for her.
I mean, I know one of the questions I had before I moved to the broker ones was around case studies and examples, but I think as we've been going along there, you can't help but give real life examples because they're just happening around us, aren't they,
Yeah,
all the
yeah.
time? But I will move to the broker questions now, if that's okay. So Scott from Chart One Mortgage mortgages over towards Manchester is curious. How does WestOne handle cases with complex income, such as clients with multiple revenue sources or self-employment? So again, I know maybe from a buy-to-let side, it's maybe not as relevant because of the ICR, but I suppose there's still an approach you've got with on both the buy-to-let and the bridging side, isn't there?
Yeah, yeah. I mean, again, like the residential first charge at WestOne and second charge term stuff, we're renowned in the market for being able to look at multiple income streams, complex incomes, and all that sort of stuff. So again, for the brokers that are listening to this, if you've got somebody that does have multiple sources of income that might be a bit complicated and things, that's you don't know what to do with it because it doesn't fit your traditional high street lender. This is where you pick the phone up to the guys at Crystal, and they will understand WestOne's offering, and we'll provide a solution there. One of the big things for us, I mean, on a buy to let, I mean, one of our big key selling points really is the fact that we don't have a minimum income, so we're not really too concerned with it. So I've worked previously in buy to let where you've had a minimum set income of 20 grand, 25 grand and things. And it can be a little restrictive, particularly when you've got people that are perhaps self-employed and are just showing a certain amount for tax efficiency and keeping money in the business, or people that might have had a recent change of circumstances whereby they've just changed jobs or whatever it is. So with us, the fact that we don't have a minimum income means we don't really worry about it too much. And on a bridge, I mean, it can be irrelevant, right? It depends what the exit is. So if the exit's going to be a sale, so for example, in the example I just gave there, where it's the lady that's in the retirement village, her income is completely not applicable because the exit's going to come from the sale of the other property that's valued more and will easily cover what our bridge is, even if it goes for a bit less than what it's worth. The income comes more about where the exit's going to lie. And again, when you've got access to, I mean, how many lenders do you have access to, Jason, at Crystal?
So this year a whole market, but we'll have funded through 52 different lenders this year.
So there you go. So you're using the likes of WestOne for a bridge. You've got an exit because the exit's refinance, and you've got somebody there with experience of 52 different lenders, and probably more that you would have access to if you needed to, that we're offering something different. Again, it just shows that like you're in good hands, aren't you, with the likes of Crystal, that can look at specialist income and stuff. But yeah, WestOne are certainly on the resi side, certainly one of the lenders that you would come to if you had complex income structure or multiple sources of income.
Yeah, and you mentioned earlier, Sean wants to know about like processing tips and how can speed occur. But I think you mentioned it earlier, didn't you, around the um just the importance again, the importance of the value of using a business like Crystal has to be that there's a value around that sourcing and placement at the beginning. So if WestOne's the best solution, we're giving that solution quickly and we're justifying why WestOne's there. So there's a sourcing and placement. And you mentioned the checklist and understanding what's required. Getting it right first time, I think, is what you said, and that's what we have to pride ourselves on. That's what we've got to deliver because we're a service business, right? So
Yeah, of course.
delivering to that checklist is absolutely crucial. But is there anything else that you'd urge in terms of what brokers should consider just from that speed perspective? Because I think a lot of the onus is on us as that administrator all the way through to funding on behalf of the brokers. But what else would you say is really crucial?
But the big one for me is kind of managing clients' expectations at the moment. We seem to have gone through the worst of it, with every lender and his dog were pulling rates relatively short notice, and clients were sitting back and waiting. It's again, it comes back to the communication thing. It's like, are we driven to get this deal done? Yeah, we are. Okay, well, what I'm going to need from you is what I ask for quickly in an order that's like going to be easy to understand. I saw someone put on LinkedIn the other day. It was like one of the things that I'd off a broker was like they needed 13 bank statements or something. They went, right, don't know what months these are for, but there's 13 there. If any of them are repeated, let me know. And it's like, well, it's like, come on, guys, you've got to help yourselves. But from a broker's, that's from the client perspective, the broker for me would be make sure you manage expectations, make sure the clients know that this is a market that's a little bit turbulent. Rates are a bit turbulent. So actually, if we want to secure something, we need to act relatively quickly with it. But you've touched on it from a broker's perspective. And I mean, we're fortunate that we haven't had the massive delays that some lenders have had. I mean, I know lenders out there in the market that have got like 10 working day process, even longer than that, to look at a document, and you kind of go back to the back of the queue next time you ask a question and all that, and things can take months to get to offer. So touch wood, we haven't had that scenario. Our team are well beefed up, and the process is well, like it works quite well to make sure things get through nice and quickly. But getting it right first time is really important. And again, when you're experienced and you know lenders and you know what they're likely to ask for, and you can preempt things, and you know that, like, you're looking through a bank statement and you can take a look at it and go, if I was an underwriter, I'd probably ask a question about that one, but you can preempt it and put a note onto the system, like we see with people that know us well, like the likes of the guys at Crystal. That really helps deals get done quicker. So again, it's an experience thing. It's getting it right first time is important, particularly when the market's turbulent, particularly when things are being withdrawn, particularly when things are taking a bit longer than ideal. You don't want to have to go and replace something elsewhere because by then the rates could have jumped up or whatever. So for me, yeah, manage expectations with your clients and try and get things right first time, would be my two big tips.
Really good tips they are, mate. And look, I know at that front end, the service delivery and the speed, and that lenders are going to take a placement consideration. So we know we've got some lenders who'll remain, maybe nameless, who look like they offer some really brilliant headline rates. But we know if somebody needs money within 12 weeks, they can't be considered because they just won't be able to hit that deadline. And one thing that's absolutely clear with WestOne is there's a consistency of delivery and there's an explicitness of service standards. So we know where we stand at any given point, which is really crucial. And so it's almost as important to us as that exit is for you. So I know when you're deciding the merits of the actual deal, that exit is so important for a bridge. Well, at the front end, when it comes to that placement, just that speed and that certainty of decision is almost 50-50 in terms of the placement of the actual case.
100%, 100%. And again, I mean, I've just done a conversations and stuff with some of my key firms on the bridging side, because some data has come out this week in the press. You no doubt you'll have seen it, but the average, excuse me, the average time of application to completion has reduced to 46 days from previously 52. Last year was 58, so it's coming down in the right direction. WestOne's we sit at about 27, so we're considerably quicker than what the market average is. And the most considered one for me, and again, getting it right first time, is the statistic that it's about 21% of deals from application go on to complete in the bridging world. So 1 in 5 complete. So that means 4 in 5 are falling away because of a variety of reasons. Client changes their mind. Maybe there's more than one broker engaged in the first place, but down vals, but also the lenders changed their mind, the lenders decided not to lend, etc. So 4 in 5 are falling away. 1 in 5 are getting done. At WestOne, we're just short of 1 in 2 on a conversion rate. And for me, that is the most powerful statistic that we have, because it means that what me and my colleagues' job are doing, which is sniffing out the right deals that we want to do up front, is working really well. We have quite a flat structure. So in our office, the likes of Tom Cantor, who heads up our bridging division, even Danny Waters, who's the CEO, like they're at the end of the phone to discuss a deal. Like I've just literally got 5 minutes before we started here, got off the phone with Tom about a deal, and it's like you've you've got that access to the decision makers so quickly. There's no credit committee that it needs to go through. We sit there and they meet at 4 o'clock on a Friday, and we've got to wait till. There's none of that nonsense with us. It's bang, decision, done. If it's done, unless something comes out the woodwork that we haven't been told about, it's as good as done. It's just dotting the i's and crossing the t's the rest of the way, and that's why we convert so well. And you're right, getting it in the right place first time. I mean, the amount of deals that I do where it's genuinely about 15% of the deals that I do are deals on bridging. This is where the client has gone elsewhere because of a price consideration, because it's cheaper, and then it hasn't materialized by the date that it would needed to, or it's come too much like hard work, or they're getting concerned that they're not going to deliver. So then they've come back, sometimes with the tail between the legs, sometimes but I'm always delighted to hear from them, because I'm going, this is our chance now to show and get this deal done, and we can still execute. I mean, I can sit here and still get deals done within the next couple of weeks before the end of the month, and certainly this side of Christmas, if a deal needs to be done to get somebody in a house before the Christmas period, you're going to be questionable if the cheaper lenders are going to be able to do that. Whereas somebody like us, who are still massively competitive on price, let's be clear, we're not expensive. We're just a bit more expensive than the cheaper lenders in the market. We'll do that, no question, and nice and easily. So yeah, you're right. It's all about trying to get it right first time if you can, and the quality of execution is going to be a consideration, particularly for experienced guys like you, Jason. I mean, that's what Crystal do. Like Chris, the guys that know what they're doing aren't blinded by the price. They're blinded by, are we going to get this deal done when we need to get the deal done by? And because ultimately that's all that matters, because the deal's only a deal when the deal completes.
You're right. You're right. Look, we're so focused on outcome and focused on completion funding. So all the language is, is on payouts, and it's on those fundings. And I'm conscious, just before I suppose give a final chance to maybe pick out some and recap on maybe some of the USPs that you've picked up on. And just really looking forward to 25, the next year, and maybe where brokers and institutions should be really focusing their efforts. So where do you see there being some real opportunities? Obviously, we can see you're passionate about the bridging space, and like you, people are still going to need money quickly. They're going to need to raise it for a variety of reasons that won't necessarily fit the mainstream. So we see loads of opportunities on the bridging side. But where do you think the brokers should be, and identifying opportunities and looking in that buy-to-let and bridging space?
I think there's going to be tons of opportunities. I mean, the big one is that we're probably likely to see the less sophisticated landlord exit the market. So there's bargains to be had there when when stock's going up and there's people selling. Particularly if you're a cash buyer, you can negotiate purchase prices down. So I think that's definitely one for your more sophisticated landlord to be talking to them about. But I think there's going to be tons of opportunity. Go back to everything that I said earlier on, like look at diversification of portfolios to support increased yields. Look at the opportunities that are going to come in the market from a stock perspective to go and pick up a bargain. Again, utilize bridging there to put yourself in a better position, because whilst you might be able to save money by using bridging when you're looking at a purchase, just because of the speed in which you can execute. They're the two highlights for me. But hopefully we see some settlement of swap rates, and the base rate's going to continue to decrease, touch wood, and rates should get to a point where the traditional buy-to-let property works again and is actually attractive and popular to a landlord. So you haven't got to put all your focus onto diversification into different, more complex property types. But we will see. If someone wouldn't have foreseen that the swap rates have jumped back up. I thought we were going to be nice and steady, but I think every time I say something, it goes the opposite way. I was convinced that base rate was going to remain the same, and it's come down and stuff. So there'll be plenty of opportunities to be had, and it's just about trying to educate yourselves to be able to take advantage of the opportunities that are out there, and make sure that your client base have you accessible and knowledgeable, that they can come to, and that you can provide them with solutions. And who better than Crystal Specialist Finance to support you with those more complex transactions?
Thank you. That's as if I paid you for that last line there. That's and listen, I think to summarise, and I touched on it before, there are some pretenders out there at the moment, and what we've got with WestOne is a genuine lender who is can do and really looks to lend. If there's a bump in a road, I always feel there is an appetite and desire to go over, under, around to actually create a fix, which I think is important. And because of this service focus that we have to have, it's our magic dust. We have to be backing lenders with that who deliver that certainty up front and deliver that operational process, which is consistently efficient. And I think we get that across the WestOne product range that that we use with you guys. And I think your conversion is exceptional, and I think the turnaround times that you touch on does put you in the top tier when it comes to actually delivering for clients who need money quickly. I think from a Crystal perspective, we recognise that look, we've got to be super efficient when it comes to that sourcing and placement. We've got to make sure if we deliver a checklist, then the checklist doesn't become a second checklist. So people get what they need from that checklist, and then we deliver post valuation with with an offer. It's as simple as that. We've got to get things right first time, and I'm delighted to say we do that more often than not. But I'm inevitably going to say that, aren't I? Look, we love having WestOne as a business partner. I think you've delivered loads of food for thought there, some great hints and tips, which I think have some simplicity to them. So just negotiating and being able to negotiate as a cash buyer just puts you in such an incredibly strong position. And brokers who think they've not got people who need money quickly are kidding themselves. And that self-employed environment, we know, being marginalised from the mainstream. So we know there's loads of opportunities with self-employed as we move forward. So I think that, coupled with the diversification, are two real areas of focus for next year. But I don't know whether there was anything, before I do close up, if there was anything else that you'd have liked to have got across today that maybe we've not covered off. Because look, I think you've done a great job explaining what you're all about, and ultimately as a partnership, we're it's a dynamic offering that we can deliver to the market. But I don't know if there's anything that we've not covered that you'd like to have covered, or anything we've not said that you'd like to have said.
There's not. I was mildly offended when you said that Jez loves to talk, but I understand what you mean now. So I think people have heard enough from me. Listen, I'm here. Get in touch with me if you need to. Get in touch with Crystal, a fantastic partner to work with. Thanks for the time today, and look forward to building on our already strong partnership in 2025.
Thanks, Jez. Look, really appreciate your time. Good luck to you and the rest of the team as you go into the back end of this year and into the new year. So thanks very much. Really appreciate it.
Cheers, Jason. Thank you.